Welcome to Market Movers. I'm Jim Urio, and today we are discussing perhaps the most traditional of the risk-off assets, and that's gold. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Scott, we have a Fed that's been talking tough about tightenings, but lately we've talked more about this European election that happens April and May with one of the candidates who's talking seriously about leaving the euro. What's a bigger deal in gold prices?
Small little European election coming up here. I actually think it's the Fed. We got the FOMC minutes today, Jim, that were a little more hawkish, frankly, than I thought the market expected, with notes in there about concerns of tax reform coming up and inflationary concerns, and maybe moving a little bit faster on the interest rate hiking path, which I think is going to affect the dollar and affect gold.
This is going to surprise no one, but I don't agree with you 100%.
I'm
think
shocked.
That it's a big deal, but I do think this European election is a very big deal. But anyway, before we dive into our trade discussions, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as trade recommendations. Prices and movements will vary in the markets. When we're talking about this now, the April gold contracts trade about $12.37. Scott.
Right. So looking at the charts, gold's had a pretty nice move so far this year in the face of what has been, I guess, a stabilizing dollar, maybe this concern that the Fed was backing off, which I think we saw from the FOMC minutes today that they're not going to do. So I'm relatively bearish on gold here, Jim, and this is unlike me, so stay with me here. I'm doing a directional play here. I'm going with the specifically looking at the 12/30 March GC put. So this is going to expire on March 17th. It's going to cost 11 ticks. This trade is going to risk the amount you outlay, the 1,100, to gain about, say, an unlimited amount. But really what I'm thinking happens to GC, it drops down to that level that it started the year at, about 1140, because the FOMC is back into play. The dollar is likely to strengthen. That's going to put pressure on the price of gold downward.
And I get it. It's not particularly my style because it's outlaying $1,100 at the beginning. But I get why you're doing it, and you get what you pay for it. You know, like you said, the reward on that is unlimited. Now, I'm looking a little different because I think the French thing is a big deal. And I think as we move closer to it, people are going to remember Brexit and have nightmares about that. Remember our election, have nightmares about that. So I'm looking at buying the April 1265 1275 call spread for 2 ticks. Now, this trade risks $200 to make a potential $800. Now, this trade expires on March 28th, which I fully understand that that's 3 or 4 weeks before the French election. But I also believe that it's the talk going into the election that may scare people more than the actual results.
Well, and with both trades, you're going to get through a couple things. You're going to get through the next non-farm payroll number,
yes,
and you're going to get through the next Fed meeting.
Yes.
What happens at that Fed meeting may be exactly the turning point in either pushing gold up or down, because the Fed being in play here is really, I think, the elephant in the room.
I like that. Well, thanks for joining us in this special edition of Market Movers. I'm Jim Urio, where we're hoping to make you a better trader.